Hello, welcome to another talk on money, business, and investing. My name is Jose. I'm the founder of the company and brand here at Master Investor. If you're new to our community, ensure to subscribe and turn on the notifications so that you know when we go live or upload a valuable talk that can change our lives financially forever as long as we apply the information. I always say this because it's so important. One thing is get the information and applying it is the next step that we must do in order to turn that into knowledge. Otherwise, just getting knowledge from other people and not doing anything with it in our lives is just information to us. So make sure that we apply whatever we're learning. Check out the links in the description so that you have access to our tools, resources, ebooks, digital courses. We have 3 books right now: The 10-Year Rules of Money, How to Build Cash Flow with the Internet, Turn Passive Income On, and How to Invest in Crypto to Build Wealth, Understanding Bitcoin and Blockchain. You can also find these ebooks on Amazon or Kindle if you like to get the paperback or if you like to read yours on Kindle. But if you go to our website, you have additional assets that will come with each ebook because we have turned each book into a digital course that is vivid. We are adding assets as we move forward. Interviews with exclusive entrepreneurs, celebrities, and people that can actually emphasize on the topic of that book, and other assets, systems, tools. As we evolve, we're going to add more assets into that digital course. When you get in today, you'll be grandfathered in for any other asset that we add in there in the future on that specific course that you got in. You will have access at no additional cost on any other asset that we add in there. So it's a win-win relationship. It's a great investment on our financial education. Take a look at the courses. Go over to our website, click the link in the description, and join our inner circle. Our mission is to elevate the financial well-being of humanity through high-quality financial education made simple. We look at opportunities to build passive income and true wealth. Today's topic is on how to invest for passive income. Remember, rule number 1 in our community here at Master Investor is that we work to build passive income and make money, work hard through sound investing, make money multiply. That's rule number 1, right, of our company here in our community, is that our mindset must be set on building passive income. That should be our priority. A lot of people, in fact, majority of people in the entire world, they focus on earn income. They're not focusing on investing for passive income. They might invest in fake assets, which at the end, there are liabilities to them, and it makes them feel good to invest in 401k, IRA, mutual funds. All of these fake assets were created by the wealthy to get the middle class involved in basically the stock market, get them to invest, get them to give their hard-earned money back to the wealthy, right? And now there's nothing wrong with that, except that we need to get educated financially so that we can use the same rules that the wealthy are using. And that's why we created the 10-year rules of money, because the old rules of money no longer apply. So if you're playing with the old rules of money, you're going to be struggling financially. If you love your job, you still need to learn how to invest actively, not giving your money away to somebody to invest it for you in a 401k that is basically penalizing you every single month. It's taking money out of your pocket. It's not bringing any money back into you, even though it may look like the 401k is going up on paper. So you may feel like you're wealthy on paper, but you're not unless you're touching that cash flow. And if there's no cash flow coming in, if you don't see money coming in, then we're not an investor, and we cannot say that that's an asset. An asset must be producing passive income to us, and sometimes capital gains income, depending on the asset and the asset class. There are 5 asset classes that exist. We cover them all in here in our community, of course, because we break the entire ultra wealthy mindset down so that we can all have access to whatever we need. Some people may need understanding on reading financial statements. Some people might already pass that level, already have that in them. They may have businesses that are doing over $1 million per month, even a day, right? To make $1 million per year on cash flow, we need to create a profit every single day of $2,750 plus per day. Once we achieve that, then we're making $1 million per year on cash flow. After all expenses are paid, that's how much our cash flow is. Now we need to have a plan for that entire capital that we're going to accumulate through our assets, right? We have to plan to invest it into other assets that will create passive income and sometimes capital gains income. Primarily, we're going to be focused on passive income because it takes a high level of financial education to achieve passive income. When we do that, we automatically tap into capital gains income. Majority of people that talk about investing, they refer investments as capital gains income. And a lot of times they're gambling because when you do capital gains income, you have to calculate. And a lot of times they don't even know how to read financial statements. So they're really gambling and they don't know what they're doing. They just feel like they should invest because everybody's investing in that asset. So again, when it's already out there, even in real estate, you want to get the deals off the market. You want to catch early trends. And I talk about it all the time, how this next decade and the next 30 years and so, we're going to see the biggest wealth transfer for those who actually catch early trends. Since everything is changing so quickly, we can position ourselves right in front of those trends that are coming our way. With digital products, with other people's products, we don't even need to create the businesses ourselves. Today, we can partner up with other businesses and still receive passive income and build our passive income through automatic sales that we're getting through our sales funnels that we control with our companies, right? We're going to incorporate a company even though we may not even create the product that we're going to be selling. We want to run the income that we're going to get from that operation that we're going to put together. We want that to go to the company that we own so that we can minimize taxes because now we're making money through a business, right? It's not coming to us directly. It's going to our business directly. And now we can use that business to buy other businesses. By the end of this video, you're going to learn the different cash flow patterns of the classes that exist. We have the poor class, the wealthy class, and the middle class. And now when it comes to money, the two mindsets are the poor mindset, which contains the middle class and poor class in them, and the wealthy mindset, okay? So here in our community, we're going to learn the difference between those mindsets and what it takes us to tap into the wealthy mindset, how to use the cash flow pattern that they use so that we can create our lifestyle that we desire, okay? By the way, if you have any questions, let me know. If we are planning on investing, there is only one way we should do it. The master investor's way is to invest for passive income. Summary: to become truly wealthy, the most promising approach is to invest for passive income. The ability to create passive income demands a high level of financial literacy. Investing in a variety of areas can yield steady passive income, not just in one asset class. Remember, we want to diversify among the 5 different asset classes that exist so that we can hedge for inflation and protect ourselves from down economies. When people are complaining and panicking about crisis and inflation rising, we see that as opportunities to become even wealthier because we understand how the monetary system works. We have a new monetary system and people still think that money is real money. It's not longer real money. Money is created with debt today out of thin air. And there's nothing backing it except the confidence of the governments around the world. Therefore, we need to make sure that money is always moving because if it's not, then it's going back to its intrinsic value, which is zero. It must move because it's a currency. It's not longer real money. If it was real money, then we can save it because gold will be backing it, right? And so since gold is no longer backing the dollar, then now we need to just print money, learn how to raise capital by bringing in sound businesses to banks, right? Real estate properties that are for sale that the banks will be interested in lending the money to because they're investing in the deal. We can see the cash flow analysis. We can see the tax returns, the financial statements of that business, which is ultimately business. Even though it's real estate, at the end, we're always going to be investing in business, whether it's one asset class or the other. We're investing essentially in a business. Even in stocks, when you invest in stocks, you're essentially investing in a business. Now, it's one thing investing in a business. Another thing is learning how to build a business, which we also recommend here inside our community to launch your business, to launch your brand, because we learn a lot throughout the entire journey, okay? And the faster we learn how to fail smart, the faster we tap into financial freedom and true wealth. So do not hesitate and start your investing career, whether you're starting small, whether you're starting with a digital product or somebody else's product. Start diving into creating passive income. Find ways that you can create money without you necessarily working. Yes, we're going to put in the time at the beginning. We may have some sleepless nights and whatnot. But once the effort is put in correctly and we follow the formula and the system of systems is running together, right? Because that's a business. So that's supposed to bring us money over and over again, even while we're sleeping or while we're enjoying doing a live stream like I'm doing right now, or doing something that is beneficial for us, right? We want our freedom. We want to be able to do whatever we want with our time. So if you want to be somewhere right now, you can say, okay, I'm going over there. You don't need to check in with anybody because we have businesses and assets that are producing passive income for us on autopilot. Okay. And it doesn't have to be a big business. It doesn't have to be the biggest real estate property. Like I said, we can start small. However, just know that it takes the same amount of energy to close a big real estate deal than a small deal. But let's get our feet wet and let's start swimming, because that's the way we can actually learn how to be an inside investor and tap into financial freedom, which is something that not many people get to taste in their lives. Really, they do not. They don't know how to make money without actually being present in whatever they're doing to make that income. So let me show you exactly how we can do that. And the answer is invest for passive income. Summary. We can most clearly distinguish between two quite distinct kinds of investors in difficult economic times. For instance, we might speak with someone who appears prosperous, but is actually having financial difficulties. And they might say something like, it is rough out there. Their 401k is taking a beating. Those assets are fake because they do not put any cash flow into the pocket of the investor. And that investor is not an inside investor, right? That investor is a passive investor, which is someone that has a job and is investing in a fake asset. And that individual lacks financial education. That's why he or she gives their money away, because he or she says they don't have time to invest. They don't have time to learn that, but they have time to work for earn income, which is very ironically, because if they just learn how to invest, they don't probably have to even show up to work anymore if they don't like the job or they want to retire early. Okay. So the main thing that gets on the way on people's lives that hinders them to become wealthy, ironically, is their job. Because if a person is working daily for money, that person will not have time to actually make passive income. Now, you can put some time on the side if you have a job now, and that's what I suggest to do. Like, I organize your time. So an hour a day, 2 hours a day, that's their 18 minutes a day that you invest in your financial education. It will accumulate. It's better than nothing. So start right now with whatever we are available to use right now. So you might be in a situation where you need to plan out, okay, how are you going to get out of that situation? You want to come out of that job early. You want to create XYZ amount per month so that you can supplement the income and you can actually retire early. And then now we can start investing in assets that will produce that quickly. Now, we don't have to take a long time. Today, we have technology, artificial intelligence. We can start marketing products worldwide, right? We can tap into passive income. We can create $2,000+ per day. We don't need to wait years to create that type of passive income. We need to understand the basics of business and investing so that we can actually take control of our finances, okay? So let's dive into how we can invest for passive income. Conversely, a prosperous investor with a distinct background may declare, I'm doing fantastic in bad economies. Money keeps flowing in from assets that it is common knowledge that the poor beyond living paycheck to paycheck. There are also no mistaken. The majority of the poor have a cash flow pattern similar to the one below. Paychecks are the source of their income, and that type of income is called earned income, which is then swiftly allocated to different costs or expenses that they have. So it comes in from their job, as we can see on the financial statement. that we're seeing on our screen. If you're watching this on our live stream, and if you're hearing us on our podcast, make sure you go to our YouTube and subscribe over there, because we are sharing great content that you can see. And if you like to have the articles via email, then go ahead and subscribe to a newsletter. It's free. Find it on the main page on our website, and you will start receiving any article that we publish. That way, when we can maybe come to a live stream or listen to a podcast, at least we are reading. It will take us 10 minutes. I don't think it goes beyond 10 minutes, our articles, but it will give you refreshing data about building our positive cash flow. So as we can see, the income comes from their job, and it goes to their income column, and it goes down to the expenses column to somebody else's asset column, right? It goes out their expenses column, and they pay the expenses, their rent, if they have a car, right? Maybe they don't have credit, right? A lot of the poor class, they may have bad credit, or they don't have enough income coming in to get credit, perhaps like the middle class. Okay, but as you can see, their cash flow pattern is going to their job, make that money, pay taxes on that money, and then they put it into the expenses after they already pay taxes on that money. And if they have anything left, which they don't even know how to invest. So the poor class hardly never invest. Okay, because they don't have any money left to invest anyway. And it does not take money to make money, like we always mention here, but it takes financial education first. You can give people money, and if they don't have financial education, they will lose the money. They don't know how to make money multiply through sound investing. They may gamble the money and make some money, but in reality, they will not be able to make that money, make more money. So it does not take money to make money, because as that was true, everybody that have money in the bank will be making money with that money, and they don't. Okay, so it's the financial education that we have, and then we can make money, make more money, of course. And we can also raise capital from thin air. We can create money from thin air. We can print money like the government does. And we have shown you many different exercises that we have done inside of our community how to do so. Okay, so just focus on the cash flow pattern. Which one do you have today, and how you want to switch it to the one that you want to match, which will be the wealthy one, okay? With any hope, they will be able to pay for the monthly expenses. If not, they incur bad debt, usually in the form of credit card debt, which only serves to worsen their situation by raising their monthly cost. Getting a better paid work or taking on another job is their only chance to advance in their mind, just to make ends meet. It is really the present way to live, because they feel trapped, and that is the rat race. Now, if they love their job, then great, right? Some people want to be that type of employee, and that's okay. But I still say, if you love your job, learn how to invest. You don't want to be that person that retires and now you have to live below your means because you're not making as much money, and your retirement plan is not doing as well as they promise you when you start investing in it, because you didn't have any control over it. You gave the money away to somebody else. You didn't learn how to invest. So now you have to spend the rest of your life living below your means. You don't want to do that. In fact, we need to increase every year, every second, every month. We need to improve. We need to go up. We need to always be rising. That's how life is supposed to be. And we have the tools and resources today. We have never lived in a time like today where we have access to information for free, and anyone can have access. So now it's easier to become wealthy even around the world. We can tap into unlimited wealth by positioning ourselves with the right systems and building the assets column with real assets that we control, that are bringing us passive income, and sometimes will bring us capital gains income. Cash flow pattern of the middle class. People who live paycheck to paycheck are not limited to the impoverished. The middle class cash flow pattern is seen here on the diagram, and it's basically the same thing as the poor class, except that the middle class have their own practice. It could be a dentist, a doctor, an attorney, a professional. They still have to work for money, right? So it's earned income. And they lack systems and financial education, and they always think that they're the best at what they do. There's very much a specialist. And that's what they went to school for, to become a specialist. And remember, yesterday we talked about the two different types of mindset when it comes to work, the generalist and a specialist. If we want to be wealthy, we have to have the mindset of the generalist. We have to know a little bit about everything so that we can hire specialists to do the small tasks and certain different tasks that we need in our organization to move it forward. We don't want to get stuck in a task, otherwise we lose our freedom. We need to be able to delegate as much as possible. So if you didn't watch that live stream yesterday or hear the podcast, make sure you go back because it was a great one and it will inspire you to have the generalist mindset, and it will go into detail how to go about it. But as we can see, the cash flow pattern of the middle class goes from their job, they have to show up to work, it comes into their income column, and it goes down to their liability column, right? And of course, it goes up the expenses column to someone else's asset column. At the end, all of the liabilities that we have on our liabilities column is somebody else's assets in their asset column. It could be the bank's assets. And a lot of people think, a lot of middle class people think that their home is their biggest investment, therefore is their biggest asset. And it's not, because they still have to work to pay for that mortgage. That mortgage is not making them a positive cash flow, even though the house may be going up in value since they acquired it or purchase it, but they didn't really purchase it yet because they still have a mortgage. They still have that debt of 30 years. Mortgage comes from the word mortir, and it's a Latin word, and it means unto death. That's why a lot of people need to understand how to manage debt, because if you already purchase a house, it's not your house. You're still paying for the mortgage. And if you're making those payments yourself with your hard-earned money, then that house is a liability, regardless if it's going up on value. Unless you pull the money out and you do something with the house that's creating passive income enough to pay for the mortgage expenses and leave you with positive cash flow, then that house will be considered an asset. You can do that. And a lot of times when we have financial education, we can look at our liabilities column and turn any liability into an asset, and it still be somebody else's asset column, and they don't care as long as we position that into our asset column correctly and it's making us money, and we can pay the payment that we owe to the bank or the lender or whatever institution we owe the lease or the monthly payment to. We can make that payment with that asset because now it's bringing in passive income instead of just withdrawing money out of our pocket. The middle class frequently appears wealthy to an outsider peering in that lacks financial education. They may have large incomes, opulent homes, luxurious vehicles, and more. However, in reality, they are merely surviving the rat race. Rather than allocating their income just to living expenditures like the poor do, they purchase obligations or liabilities like luxury automobiles, homes, and trips, which causes their money to disappear from the expense column and never comes back to them. So they didn't cultivate that money. They didn't plan that money into an asset. They're wasting all of their money into liabilities, and there's nothing wrong with having liabilities, like I mentioned over 1 million times, right? And I always say this because it's not about cutting expenses. It's not about cutting liabilities to become wealthy. It's about just focusing on increasing our assets. Yeah, some liabilities have to go. If they're damaging you internally and everything, then you gotta cut them. But if it's something that we like to have, like a nice car, let's focus on the assets column so that we can bring in the passive income that will pay for the liabilities cost that we want to have and that we already have in our liabilities columns. Our focus should be 100% on that assets column that we all have, okay? Focus on that. Don't focus on the income column. Focus on the assets column. Invest for passive income. We need to see the passive income fast. We cannot wait a year. We cannot wait. We need to see it now. So if we invest today, we want to see passive income coming in like this week, right? Or next week. It needs to be fast. We need to see that income coming in. That's an active investor. We cannot invest and wait. That's not how it is. We need to receive passive income. So it's not about cutting expenses at all. It's about expanding to build wealth. A lot of people think that by building wealth it requires you to save. No, it requires us to invest. Literally, move money from cash flow and asset to cash flow and asset. If we're saving, it's because we're going to move that money into a cash flow and asset. We always have a plan for every dollar that we touch, even before we get it. to multiply in a sound asset, meaning in a system of systems. They may also invest some money in 401k, but as we will see later, that is in liability rather than an asset. The middle class exhibits an intriguing trend whereby their taste increases and they desire more as they take on greater liabilities. As a result, they take a job that pays more and take on additional bad debt. Plus, it takes them more time out of their day to make that income, which is higher than the previous job, but now they have less time to even understand how to invest. So they're going to chase money the rest of their life, trying to pay and look good and maintain those liabilities that they have, when in reality they could have focused all the energy first on the assets column, and those liabilities will be paid off for free. They buy the assets and they can retire from the job. They won't need the job to pay for those liabilities. It's just a different mindset. We need to change our context to the wealthy one, and that's what we're doing here inside of our community. Every time we come and listen to one of our podcasts or read one of our articles or watch one of our videos, whatever content we are producing is going to inspire us to have the wealthy context, which is more important than the content. The frightening part is that they won't be able to pay their bills if they lose their work. Why? They frequently have significant bad debts and costs and different expenses, and their only source of money is their salary. With luck, they will be able to find another job where it catches up with them. They file for bankruptcy if they don't. Cash flow pattern of the wealthy class. The financial or cash flow pattern of the wealthy and the middle class are very different, and the poor. And this is how it appears. As we can see, our income comes specifically from the assets column. In this financial statement, the positive cash flow comes from passive income and capital gains income, assets that we control with our companies. And it comes into our income column, and then we grab that income, run it down to the liabilities column, and goes up to the expenses column, and it goes out and it can come back to our assets column because we can turn liabilities into assets. Okay, so that's what we're going to do when we get positive cash flow. For every business that we have, we will have a surplus. That's our positive cash flow every day. We need to treat that as a good expense. We need to already have a plan for that money to go work to create more cash flow for us in a different asset class, maybe, or we're going to maybe duplicate the same business that we are doing. It could be a marketing strategy that we're using to sell this one product that is bringing us $2,000 a day. Now we just have to duplicate what we're doing so we can create another $2,000. Now we have $4,000 coming in. So we can always turn that surplus into an asset. That's what we want to do. We want to grab that. That's the most savvy way to do this, okay? And that's how we're going to tap into infinite return on investment when we have no money of our own into an asset, because we recoup the money back, or either that or we use 100% financing through a credit card or a personal loan to launch or acquire this business that is now creating passive income. And since we control the asset, we have none of our money into the deal and we still collect positive cash flow. That is infinite return on investment. That is money for nothing. That is literally printing money for us from thin air, okay? Because we have none of our money into that deal, into that operation, okay? That's what we want to do. Every time we invest money, we want to get that money back as soon as possible. And if we have debt with it, then it's okay. We want to control the debt. We can take 30 years to pay the debt. As long as that debt is putting money in our pocket, every time we pay the debt in the month, we also have some left for us as positive cash flow, because we're using the asset, of course, to produce income. Otherwise, it'll be a liability if we have to pay for it ourselves with our hard-earned money. An inside investor can always turn some liabilities into assets in our financial statements. Therefore, we can recycle back the surplus of our business as a good expense. In other words, we will let our positive cash flow from our businesses serve us as leverage to buy other cash flowing assets. As you can see on the diagram, you the way we flow our money is from our assets column all the way to our income column, goes down to the liability column, go up the expenses column, and then comes down back to the assets column. To put it simply, cash flow from our investments is how we truly become wealthy and how we create our passive income. Then we purchase liabilities and cover those expenses with this type of income, with passive income and capital gains income. So our companies ultimately pays for our living expenses, liabilities, and anything that we want in our lives. To achieve this, we don't need a job or earn income like the poor and middle class do. Each month, the funds arrive in the form of passive income to us. What separates earned income from passive income? The primary distinction between the individuals we meet and have met previously is whether they had earned or passive income, which is fundamentally a mentality difference. First, let's examine the cash flow circle. As we can see, we have 4 players. We have the left side of the cash flow circle. We find that E, the employee, has a job. The self-employed owns a job, right? And then on the right side of the cash flow circle, we have the business owner, owns and controls systems. We have the inside investor, makes money multiplied through sound investing. 97% of the population is on the left side of the cash flow circle. They work and they thrive as an employee or self-employed, or sometimes even both. 3% of the population is on the right side of the cash flow circle as a business owner and inside investor. The world's wealth is 3% is on the left side of the cash flow circle, and 97% of the world's wealth is on the right side of the cash flow circle, meaning that on the right side of the cash flow circle, that's where wealth is created, on the left side of the cash flow circle. So choose which side you want to be on. You can make a transition, start today at this time right now by shifting our mindset. We start shifting from the left side to the right side of the cash flow circle. On the right side of the cash flow circle, we find freedom, total freedom. On the left side of the cash flow circle, people think that they have security, which they don't really, because an employer can fire them anytime for no reason. And they can just do it and leave you with nothing. They're not going to pay you for the 25 years that you gave them. You don't take anything with you except all the paychecks that they already pay you. So it's not really security in that scenario, right? But on the right side of the cash flow circle, we find freedom. When we don't work, we still get paid. On the left side of the cash flow circle, if the person doesn't work, they don't get paid. So they're doing active income, trading one's time for money. On the right side of the cash flow circle, we have passive income. Money and systems work for us. We must understand that 97% of the world works for active income, also known as earned income, which is taxed at the highest bracket. Such income is the hardest to attempt to become wealthy with, due to the fact that it requires the individual to trade time for money. And as we know, time is priceless. We cannot sell our time if we want to become wealthy. We must invest our time instead into our assets column by focusing and investing for passive income. The left side of the cash flow circle seeks security through job security. And the right side of the cash flow circle, we attract total freedom by accumulating wealth through investing for passive income, and we also get financial security. Once we have passive income coming in and we don't have to work for earned income, who's not going to feel secure? And if those assets are well pegged and they are true businesses, then who's not going to feel secure with having and controlling true businesses that are creating passive income even while we're sleeping, because they are solving a problem in the world. Every business is built to solve a problem in the world. So as we can see on the diagram of the cash flow circle, on the left side, they think that they're going to go to security, right? They're achieving security by having a job and feeling that they're getting a paycheck and they have to show up and they have their calendar full. It makes them feel good. But on the right side of the cash flow circle, that's where truly freedom is achieved, and security too, real security. The E stands for employee. Workers seek a wonderful position with a competitive income and they value security. The S stands for self-employed. Self-employed people appreciate their independence and freedom, yet often are socially awkward. They don't trust others because they are the finest at what they do. They are employed, yet they do not own a company. They cannot make money if they do not work. They are therefore not truly free because they still have to work, even though they are free in the sense that they are their own boss. And yeah, they may have their own company incorporated, but that company, that's their job. Okay, they have to show up every day. Then it's not a business to them, right? A business is supposed to make us money whenever we're not there. That's a true business because it's a system of systems. Even if it's selling one product for us digitally, we don't have to have the product. We need to create the product. But if that sales page and that sales funnels is closing in 10 sales for us on autopilot for the next month, well, that, or for the next year, that is a business. It's creating passive income to us. We don't have to show up. We created the ad. We launched it. It's closing in 10 sales a day, and it's increasing every day. Every day we're getting 3 new sales. So now by the end of the month, we now have, 50 plus sales per day accumulated. Okay. So that will be a business, right? It's increasing in profits. It's scalable. We're using leverage. We're using systems. So B stands for business owner. Owners of businesses also value freedom and independence, but we get it through teamwork and system development. Our company generates the passive income, thus we don't need to work for it. The I stands for inside investor. I'm a financial investor. We must receive cash flow to be an inside investor. Among the people in the cash flow circle, inside investors and business owners are the most financially savvy. That is the right side of the cash flow circle. By investing in assets that generate positive cash flow each month, we use our money to make money because we have financial education, so it's not a gamble. The mentality and financial flow of individuals on the left side and the right side of the cash flow circle differ from one another because the E's and S's are worried about their security. They work for earned income. That is money that other people create and then compensate them for. They basically market time. The number one reason why people do not become wealthy is due to focusing only on working at a job for earned income. True freedom is a worry for B's and I's to pay for our expenses. We construct companies and make investments that makes us passive income. We will never have to work another day of our lives if we so want. There are 2 kinds of investing: passive income and capital gains income. People who are on the left side of the cash flow circle may consider themselves to be investors. For example, they might be someone who gets nervous when they think about their 401k not doing well. Actually, they are more of a gambler than an investor in an investment. Note that E's and S aren't intelligent. Mind you, they are frequently quite intelligent, but not wealthy. They lack financial education. They're definitely not intelligent when it comes to investing because they lack the financial education. If they would put the time that they put in the profession into financial education, then they will be wealthy without a doubt. And by coming into our community, you're going to get that education. That's the whole purpose of what we're doing here. If, for example, they invest in a 401k plan, they will be dependent on the fund's monthly fluctuations. Even worse, because it deducts money from their pocket each month rather than adding to it, it is truly a liability. If earnings are collected, then it might be considered an asset. That is a liability up till then. This is the appearance of that investment pattern. Capital gains income, it will only go up if the market goes up, if the asset goes up in value, right? And we want to focus on passive income because we're here to control and hold those companies that are creating passive income for the long term because we want to create and accumulate excess of cash flow so that we have freedom. And yes, we're going to have assets that will bring us capital gains income, but majority of people will only focus on capital gains income because they lack financial education. So the only way for them to make money is if the asset goes up on value and someone buys or refinance or they do a refinance, right? Somebody buys their asset, and if possible, they can do a refinancing and then pull money out. And if they lack financial education, they might just blow that money and they will end up losing the asset and their money. So we must have financial education, okay? Because just money alone does not make an individual wealthy. This is the kind of investment meant to generate capital gains. When E's and S invest in 401k, they are hopeful that the value will increase and they will eventually be able to sell and profit. Like any bet, it is a chance, but it might pay off. Regretfully, it is also has the highest taxation of any investment, capital gains income. Real estate investors are located on the right side of the cash flow circle, which represents investors seeking to generate passive income, also known as positive cash flow. For instance, we receive monthly rent from our properties, take advantage of favorable tax treatments or advantages that we have in the tax code for wealthy entrepreneurs and inside investors, and invest very little of our own funds in our transactions because we're using OPM, other people's money. We're using debt. We understand the power of debt. It's tax-free. Debt is legally tax-free because money is created with debt. So we can do the exact thing the government does, which is print money from thin air, using the bank's money, using credit card, and any lender that we can raise money to invest for passive income. That's genius. That's what we want because we're lowering taxes all the way to zero legally. Passive income is taxed at the lowest bracket. 3 types of income that exist: earned income, capital gains income, passive income. Earned income comes from the left side of the cash flow circle, right? Trading time for money. You get a paycheck or salary, then it's taxed at the highest bracket, then goes for investing, capital gains income, and passive income. Passive income is taxed at the lowest bracket. Capital gains income is taxed higher than passive income, but in some asset classes, we can defer taxes using like the 1031 exchange, for example, in real estate, where we roll the capital gains over to a bigger asset within a certain amount of time required by law so that we can defer the taxes, okay? Meaning we don't have to pay taxes on that, at least not for now. And we can continue to do that over and over again. But that's for someone that is investing for passive income, not for a quick pay on capital gains. A lot of people are in the business of real estate for flips. They grab a bad house and they flip it. That's capital gains income. We're not flipping anything here. We want to create passive income. Yeah, there are some times where we might exchange an asset to a bigger asset, but we want to control assets that are producing passive income all the time. Additionally, we only perceive opportunity when the market declines, since these kinds of assets are put up for sale by sometimes they're very uneducated investors. They panic. People panic when they see the economy crashing, and that's when we come in and we actually take advantage because we have financial education. Assets pay for expenses each month because these investments are meant to generate passive income. This is what real freedom looks like. This is the appearance of the cash flow pattern and the investment pattern, actually, of the wealthy. As we can see here on the diagram, we have the financial statement and we have our assets. We are making positive cash flow or passive income from controlling assets, even when the economy is doing bad and it's coming into our income column. Types of investment for passive income. By now, hopefully, we should have enough knowledge to understand that investing for passive income is far superior to earning any other kind of money. In order to wrap up this topic, consider the various strategies for investing in order to get passive income. Our recommendation is to identify our areas of interest and then develop or delve deep to learn everything we can about them. But even the ones that we don't like, the asset classes that we don't like, eventually we have to get to them because we need to diversify among the 5 different asset classes that exist so that we protect ourselves from down economies and hedge for inflation. So eventually we got to learn even the ones that we don't like so much. Okay. And I said that before, and I said that yesterday. I remember very clearly when I was talking about this specific topic, right? To build for passive income and diversify among the 5 different asset classes that exist. and that we have to do things that we may not like to become wealthy. But the sacrifices are worth it because we're attracting total freedom, and it's not permanent. The sacrifices, what we're doing, is not permanent. It's going to actually come back way more because we have the total freedom. So make sure that we learn how to do delay gratification, right? And invest in our financial education all the time. That should never stop. We should always go back to the basics of business and investing. That's why a lot of times you hear me say the same thing over and over again, because not only we have new people flying into our community every day because we're spreading tremendously across the world. I mean, our podcast is growing and we're so happy, right? Because we are completing our mission every day. But not only for the new people, the new partners are coming in to join us here at Master Investor, but also for all of us so that we can get refreshed on the data and we don't forget the basics. We don't forget the core values of the wealthy entrepreneur, because it's very easy to forget them, or at least to push them to the side and start operating with the old values and with the poor values of money. Okay, so we need to have the wealthy mindset, and we need to learn what are we investing for when we do, and we need to pick passive income specifically. So some of them will be real estate. All of Master Investors partners love real estate. In fact, we think it is the best investment category for passive income, together with digital businesses or any other business that produces passive income without, of course, having the investor be present. Otherwise, it's not a business. And real estate rent is what makes up our passive income in real estate. Put simply, we will have passive income if our rent pays for our living expenses. Our passive income will increase with the number of investments we have or their size. Great tax advantages and the ease of utilizing OPM, or the people's money, the bank's money, to invest in real estate are further advantages. Stocks. Although stocks aren't our preferred choice for capital gains income investing, we do think they are a great source of passive income. Dividends and cover calls are two strategies we can use to invest in companies for cash flow. Check out other articles about investing for cash flow with stocks that we have published here before to discover more about these asset classes that allows us to create positive cash flow. Business. To take use of the advantage of the B side or the right side of the cash flow circle, we do not need to be a business owner or create the product. Like I mentioned earlier, we don't need to necessarily create the entire company, but we do need to operate with a company, okay? So we can have our company where we're going to receive the income, and we're going to be utilizing other person's brand and company and products because they already have a catalog and they have an affiliate program where we're going to partner up with them and we're going to bring sales to their company in exchange for a commission. And if it's a subscription product, we'll get residual income. And even if it's a one-time commission, we can still create passive income by utilizing the compounded velocity of sales on autopilot. Like I said earlier, if we get in 10 sales per day from that one product, we're not doing anything except just overseeing the ad to make sure it's running, which is take us 1 second to look at it and says, okay, it's running, it's bringing in 10 sales per day. That is passive income. That converts into passive income. Investing in the ventures of others is a fantastic method to generate passive income too. As an inside investor, we have the power to direct a company towards enormous profitability, typically by holding a board seat. We always want to be able to have control, scalability, and leverage in our investments. We are not accountable for running the day-to-day operations of the business, unlike a business owner, right? To compensate for our capital, we just get to enjoy the passive income. Now, we do suggest that we master how to start a business from scratch and turn such business into a brand. It's an unfair advantage to have in us. Let's not hesitate in starting a new business because we will learn more from starting than not to do anything due to fear. We must be active investors. investing for passive income specifically. Crypto. Now, crypto is a currency, not just an asset class to invest for capital gains income. We can generate cash flow with crypto as it is a currency now. We can use the gains instantly to buy other assets. Follow the cash flow tetrahedron to invest for passive income. This diagram can guide us to ultimate wealth by tapping into the velocity of cash flow and infinite return on investment. Basically, once we follow this formula to build wealth below, we can get anything for free legally due to the financial education and financial experience we possess. Our business's surplus goal is to buy other cash flowing assets for our assets column. We will rinse and repeat to the point where we have excess of positive cash flow or passive income flowing to our pockets even while we are sleeping or doing what we love to do. As you can see on the diagram, we have our businesses, revenue, pay for our expenses, and our expenses are also real estate deals, paper assets, other assets, and we're literally taking our surplus and making it a good expense by reinvesting it back into different asset classes. Invest now to generate passive income. Although it is a terrific technique, investing for passive income requires financial intelligence. Begin by gaining as much knowledge as we can on the investment that most interests us. But we also need to learn the other ones that don't interest us because we need to diversify among the 5 different asset classes, and we don't want to end up giving our money away to anybody to do it for us because then we lose leverage, scalability, control, and our return on investment was not going to be great. Study as much as we can about money as well. Enroll in classes, work with a real financial mentor, and take advantage of all available free financial education that we have available here on our website, right? And other communities too that have great information out there. So make sure you choose your mentors wisely. Don't just listen to anybody. Make sure we have chosen the ones that already done what we want to do, okay? Don't fall for the fake teachers. All we need to do is seize the opportunity and proceed accordingly. Resources wise, there is an abundance of them available, more than in the history of humanity. Like I mentioned earlier on our talk, we are living in the best times to create wealth. Anybody can do it because we have information in our fingertips and we can sell via systems worldwide, starting right now. Start investing in high quality financial education by reading our financial ebooks. We have the 10 New Rules of Money, how to build cash flow with the internet, turn passive income on, how to invest in crypto to build wealth, understanding Bitcoin and blockchain, the rise of legitimate reserve digital currencies and assets. I hope that you enjoyed today's talk. Let me know what you learned down in the comment section. Reach out, go to our website, join our newsletter so that you have access to our articles, and we're always going to sleep smarter than we were yesterday. So we need something to read, something to listen to. So if you can't listen to our podcast, make sure you're reading our articles because it's going to inspire us to create brands and real assets that are producing passive income and creating true wealth for us. Bring you the good and bad news of money, the business principles that work in all economies. Thank you for listening to today's talk on how to invest for passive income. Stay extraordinary and wealthy. Bye for now. Okay. Perfect. Let me publish the podcast. We almost reached there an hour. Let's see what else here. Let me know if you have any questions, okay? Okay, let me see. Mm-hmm. And courses. All right. All right. I hope you enjoyed today's talk. Okay, let me know if you need any help. Start investing today for passive income. It'll be the best thing you can do. If you have money saved up in the bank, invest in your financial education, learn about whichever asset class you want to start with, but specifically dig into that passive income. Like, we need to receive it. And I think, and I know the best way to start is through businesses digitally, because you can tap into that flow and you can see money coming in like immediately, as long as you put the systems in place. And if you have the potential and the ability to acquire real estate property, or maybe you have one right now that you can turn into an Airbnb, you can start creating passive income and then use that passive income to start building more assets, acquire more assets that produce passive income. Anyway, I'll talk to you on the next live stream. Thank you for having me. Make sure you join our inner circle And I'll see you later. Bye for now. Stay extraordinary and wealthy.